All right, good morning, everyone. Happy Monday, December 30th. Getting towards the tail end here. Hey, what's up, Art? Good morning, Roman. Good morning, Russ. Good morning, Omer. All right, guys, we shall jump in here. My biggest piece of advice, I think it's a good time for patience and maybe a little bit of caution, little short-term caution. I don't think at the moment it's a great spot to have a bunch of swing trades open. Now, granted, in my room, we have one swing trade open, which I think is a beautiful setup. We've got a February expiration debit spread here in TSM. And you've got all the pretty colors, the squeeze, the buy signals. Good setups no longer work how they should when you don't have a good market behind them. Now, not to say we have a bad market behind TSM, but a couple of little short-term warning signs here. So looking at the futures, we got Bitcoin down about 2%, NQ down about 1.5%, S&P's down about 1%. A little bit of red here. Now, for example, take the NQ. All right, if we're looking at a weekly chart, for example, there's no problems here. Structure is bullish, trend is bullish, momentum is bullish. Nothing bearish about that. We've got the buy signal. We got the perfect score of 15. It's very bullish. It'll remain very bullish all the way down to that weekly 21. So yeah, bigger picture, everything looks fine here. We could pull back another $1,000 or so. It's all going to look pretty bullish. We could drop down to the 3-day time frame. And yeah, for the NQ, that also looks really bullish. Good trend, good structure. Any day now we'll get it. Right, really, really bullish. If we drop down to the daily time frame, now we're getting a little bit of a shift. Man, these charts are slow. Hang tight, guys. We'll get it. All right, so your weekly chart is beautiful. Your 3-day time frame is really bullish. You drop down a notch to your daily time frame. It's a little bit mixed, right? Check the scoreboard. We have a 6 out of 15. Let me grab my Camtasia real quick. Record the screen. All right, but for our daily chart, we get a score of 6 out of 15. So not great, not bad. The trend label is blue, so that's neutral. The structure label is blue, that's neutral. And now momentum goes bear. All right, very, very mixed. Drop down to an hourly time frame. And now the bears have pretty much got full control of it. We got a sell signal. We got a negative score. We got a score of negative 15. So that's kind of the dynamic we're trying to work with. Bigger time frames remain bullish. They're going to remain bullish on a bit more of a pullback. Lower time frames, really, really bearish. Look at the hourly here. Negative 15, bear trend, bear structure, bear momentum. We might have a really bullish weekly chart. I can't buy that weekly chart when my lower time frames are shaping up like that. So yeah, it's bigger time frames versus smaller time frames. And if you're waking up today and you're buying calls that expire, 2, 3, 4, 5 days down the road, then your major focus should be the shorter term. You're buying calls that expire out into April, May, June, July. And maybe the hourly sell signal doesn't matter as much. But quick look here at the S&P futures. All right, you check an hourly. It's really bearish. Negative 13, bear trend, bear structure, bear momentum. All right, so if they can't quickly fix all of that, your next good bounce, it might be making up for your next bounce, you might try to short it. But at the same time, you go look at the weekly, and yeah, really, really bullish. So point being, with respect to the bigger time frames, we're in a bull market. That hasn't changed. We could keep on pulling back a bit, right? The S&P futures could pull back into, 58.50, another $100 lower. They haven't done any damage to the weekly chart. So what am I looking for to get long? I want that bullish weekly. I want that bullish 3-day time frame, 2-day time frame, but I can't do anything with them. I can't jump in here, buy calls, sell puts until they fix all of this up. It's not a great combination for an active trade. Really bullish weekly. And then the 4-hour chart has a sell signal. The 2-hour chart's got a sell signal. You've got one on the hourly, got one on the 30, the 15, and the 5. When that happens, doesn't matter how good your bigger time frames look. We can take that kind of weekly chart. We can look for a move like that. All right, walking higher, walking higher, walking higher. That'll never happen with a bunch of lower time frame sell signals. So make sure you respect that. We pull back another 50, 70, $500. Bigger picture, nothing has changed. If anything, take it down a little bit more. Buyers come in at that weekly 21. That might make for a good buy the dip opportunity. And then also looking at the futures here, I don't think they're going to help us such. Let me check 2-day squeeze and a daily squeeze. I don't think they're going to help us out too much today. And maybe not even this week for that matter. But maybe next week, maybe mid-January into February, we could get some help here from the brand new 2-day squeeze and the brand new daily squeeze. But I can't do anything with them, bullish or bearish, until we get really good alignment. So on the 2-day squeeze here, what do we do with that? We don't do anything with that. We don't have enough edge. Scoreboard gives it a 6 out of 15. Right? It leans a little bit bullish, but not that great. Trend is neutral. Structure is neutral. Momentum goes bearish. Is that a perfect short? Not even close. A perfect short looks like negative 15, bear trend, bear structure, nothing but red labels. When you get in the mixed match, you're getting a little red, a little blue. You tend to want to avoid that. And yeah, as a heads up for all of you with the big 3 squeeze indicators, I did finish up these labels over the weekend, so we'll talk more about these in my room later, and then we'll try to get the update sent out ASAP. But yeah, guys, in a nutshell, I wouldn't be in a big rush to really do anything. Frankly, maybe for a few days, maybe for a couple of weeks here, there might be a lot to be said for having a day trade focus. Indexes are more so just, really choppy, a lot of violent back and forth. That can make the swing trading game really tough. But in the midst of that volatility, you can find some great day trades. But yeah, now our daily chart drops to a 2 out of 15. So be very cautious here to the buy side. And then one more thing for you in the futures, the almighty Bitcoin. They told me Bitcoin would never pull back ever again. I would be a little cautious jumping in here for a long as well. The daily chart gets a whopping 4 out of 15. Neutral trend, neutral structure, bear momentum. I don't really love any of that. You drop it down to the hourly time frame, and I think this all makes for a short. 1 hour squeeze, negative 15, bear structure, bear trend, all the above. Now, bigger picture, right? You go look at the weekly chart of Bitcoin. It couldn't be any more bullish. Big time breakout, fired the weekly squeeze, perfect 15, bull trend, bull structure, bull everything. Don't forget though, right? They push away from that 21 EMA. At some point down the road, we got to come back to it. Meaning today, tomorrow, this week, Bitcoin could pull back a casual $13,000. Nothing's really changed. Build up all the energy, fire the squeeze, get the push, pull back the support, and then you look to take it from there. So caution on the indexes, caution on Bitcoin. Mind you, caution does not mean you wake up and short everything. If anything, just be a little easy on the buy side. And then working through a few of the key names here. And like I mentioned, right now we're long TSM. And to our benefit, TSM's our only open trade. And I say to our benefit because, October, November into December, we've had a really, really good Q4. Now, to be fair, you look at the chart of the markets. If you've got, any level of experience under your belt, not too tough to have a good Q4. QQQ broke out. It had a big weekly squeeze. Apple had a big weekly squeeze. There was Amazon, Netflix, all the above. That's not the tough part. All right. When shit, excuse my French, I'm sorry. Look at me cursing on a Monday morning. When things are going up every single day, it's not that tough to make money. But what I've experienced before is you're making money for 1 week in a row, 2 weeks, 3, 4, 5, 6, and then the unthinkable happens, the unimaginable. The market actually pulls back to support, and you're giving back all the progress. So in my room, I love the fact that we had a good Q4, but then I think more importantly too, as things are getting a little hairy here, we only got one open trade to manage, which I think, as far as good setups, TSM really can't get any better. The daily chart has a squeeze, a score of 15. I know everything perfect. A plus on the 2-day time frame and A plus on the 3-day time frame. So for my style of trading, that's all just picture perfect. Now here's the issue. That ain't going to work, most likely, without a good market and a good sector behind it. So we compare a 3-day chart of TSM to a 3-day chart of the SMH. They're not really in the same league. TSM's 3-day chart is perfect. SMH has an 8 out of 15, bull trend, neutral structure, bear momentum. I don't love that. Little bit too much of a mixed bag. And then short term, do I have a good market behind TSM? Today, tomorrow, next couple of weeks here. Well, that all might be. That's all kind of to be determined. Point I'm trying to make is, you can wake up today, you can go fire up the scan. You're going to find something that looks really, really good. All right, we could take Chewy, for example. And yeah, for sure, Chewy all by itself, that's a really good looking daily squeeze. We got the IWM rolling over, S&P's rolling over, QQQ rolling over. What are the odds they're going to get a big breakout here in Chewy? Now, granted, they could, of course, but I like the odds a lot more if the indexes, the sectors, everything's just really bullish. So yeah, for those of you in my room with our TSM trade, y'all know the drill here. I have to like it above 190. Why do I like it right now? It's an A plus 3-day squeeze. It's going to be an A plus 3-day squeeze at 205, 210, 200, 195. Everything I like about it right now will remain the same as long as it can hold price above that 21 EMA. So if I got shaken out on that little dip last week, nothing really happened here. We pulled back to 190. We closed below that 21 EMA. Now something has changed. At which point we gotta have a conversation about that one. And then, of course, earnings are in a couple of weeks as well. But yeah, that's the only open trade we got. And then looking at a few more here. Speaking of the semiconductors, I don't want to call it a troublemaker. Yeah, I'm not going to call it a troublemaker just yet. But Nvidia ain't helping at all. Going to gap down to about 134-ish this morning. Now, to be fair, should I expect Nvidia to be really, really strong right now? Not based on that daily chart. -2, neutral trend, neutral structure, bear momentum. Does it make for a great short? I don't think it does, but does it make for a great long? Well, if I'm buying Nvidia, what am I looking for? Right, and not 3, 4, 5 weeks down the road. What am I looking for ideally immediately? I want to get a little bit of that good stuff back here. You buy it and we're trading higher, pull back the support, take out the highs. That's the good stuff. That little blue dot, what that blue dot means is on that candle, you had the perfect score of 15. All right, so everything on the trend checklist, everything on the structure checklist, momentum, Nvidia could not have been more bullish back there. So now guess what? You go buying calls, you buy it on a 30-minute squeeze, hourly squeeze. Pretty much anything you're doing back there, it's got a pretty good chance of working for you. Now everything is shifted. We're below the 50, 21 below the 50. We don't have stacked EMAs. We don't have a buy signal. I can't buy it right now and expect the same kind of price action I got back here. We don't have the level of alignment. What I am watching with a lot of patience, and again, here's more of that theme. Right? They haven't done damage to monthly charts, weekly charts, 3-day time frames, 2-day time frames. It's your daily chart and down. Daily chart and down, it's all looking a little rough. But if we look at the 3-day squeeze here for Nvidia, nothing about it bearish. Right? Score is 12 out of 15. Bull trend, bull structure. We got to work on momentum. But for the most part, that all leans pretty bullish. Why can't I wake up and buy that today? We don't have any alignment. I don't have a daily buy signal inside of that. I don't have a 4-hour, a 2-hour, a 30-minute, 15-minute. I don't have anything telling me to buy that. So what am I waiting for? I'm waiting for a morning where I wake up. Nvidia's got a good-looking 3-day squeeze. And then from the 5-minute all the way up to the daily chart, we've got alignment for a push. Daily chart down to a 5, bunch of buy signals, then you jump in, then you call for a move higher. Until they do that, I don't think you call for anything. So that's not helping the SMH at this point. And then moving on to the one they call Tesla. I think a few of you might have heard of this one. Gapping down to 420-ish. Yeah, no big problems there, I don't think. They could pull it back into 410-ish. It's just to pull back to your daily 21. Momentum looking good, structure looking good. But again, right, we've got a good-looking daily time frame. We go checking out the labels. We don't have any other buy signals. So my 4-hour chart, my 2-hour, hourly, 15-minute, 30-minute, none of them are telling me, yeah, jump in and buy that Tesla daily. When you're getting that push off that 21 EMA back there, you had that alignment. 4-hour chart says, hey, let's go for it. 2-hour buy signal, all the above. But more importantly, today, tomorrow, I don't think it's a Tesla thing. Got to put the indexes first. S&Ps find a bottom, QQQ finds a bottom, the buyers come in, we're getting some buy signals. Hey, at that point, yeah, I definitely want to buy some Tesla. Or at least consider it. If they get that big boy below $400, could be a bit more troublesome. But I'm going to keep an eye on that one. And then quick look here at Microsoft. I don't even like showing you Microsoft, but I'm going to show you anyway. Keep an eye on the weekly. And by keep an eye on the weekly, I don't mean, hey, when the market opens, go buy a bunch of out-the-money calls. Watch it all develop. 11 out of 15, bull trend, bull structure. Only major issue here would be momentum, which means next week, couple of weeks down the road, they take our MACD line, pull that back through 0. Then we're getting nothing but the green labels. This one is just nothing more than conversation amongst friends. If the market can hold up, if they can rebound, And then if Microsoft can go through total rebuild from the ground up, 5-minute bullish, 15, 30, hourly, 4-hour daily, this could be weeks, if not months down the road. At some point, there might be a buy here in that weekly squeeze. Take the weekly uptrend, take the weekly squeeze, wait for better alignment. That could eventually take Microsoft into 490, 500. To try to call for that today without anything in the form of a buy signal, I don't think is a great idea. Next up is Google. I think Google looks awesome. 15 out of 15, bull trend, bull structure. All right, Google looks really good. Before I'm looking at buying Google, what am I waiting for? I want to buy trigger on the QQQ. If I can't get a green thumbs up from the QQQ, I want to be a little cautious jumping in here and buying the Google. But in terms of things I want to buy, compare Nvidia to Google. And mind you, I love Nvidia. Nvidia is my top 1 or 2, P&L names all year long. But right now, Google versus Nvidia, that's a -2 versus a +15. Probably want to spend a little more time watching the Google. And there is a 4-hour squeeze here. And we'll see how that one holds up. But a couple more for y'all. I don't have anything for you in Amazon. Good looking 3-day squeeze for Meta. But not to be a broken record. Here's our current dilemma. 3-day squeeze for Meta. You're checking every box. A+ setup, perfect score of 15. All right, that could all make for a move into 650. Now, what can trigger the move into 650? Really good alignment from the ground up. We don't have any of that, right? Drop down to our daily chart. We're going from a perfect 15 to a 6. Neutral trend, neutral structure, bear momentum. Well, here's the thing. We are never going to find a 3-day squeeze that breaks out, fires, explodes higher when the daily chart can only crank out a +6. They can't do it, right? That daily chart has to support the push. We go dropping down to a 30-minute. Yeah, well, I don't think I've ever seen a 3-day squeeze fire long when my 30-minute chart has got a -6. Not really a meta issue. It's just kind of the current market. Monthly chart looking good, weekly chart looking good, 3-day chart looking good. Everything below that, a little bit rough. So what do? You watch it. You're not in a big rush. You don't got to be the first guy or gal to buy Meta. Watch that 3-day squeeze. Look for support. And if you have the indicator, you don't jump in until you get a good trigger. For a 3-day squeeze, I'm thinking at a minimum, if not an hourly buy signal, then a 30-minute. So no rush on the Meta. And then Apple here, who's a total beaut. Not a beaut. I think I wanna buy up here. And we had a really good trade here, so she was good to us. Could Apple go higher? Of course. Apple could go to $300 tomorrow. From a probabilities perspective, we can't call for too much more from that weekly squeeze. It kind of worked as advertised. All the energy builds up near that 21 EMA. They push, they break it out, they fire the squeeze. Took us right towards our target. Take that squeeze, try to call for a move into about 2.5 to 3 ATR. Right, 2.5 to 3 average true range moves above that 21 EMA. And in my experience, 7, 8 times out of 10, that's going to be the easy part of that push. Right. Well, Apple already got there, and now the S&P is getting a little soft. QQQ getting a little soft. You maybe try to wait for a pullback. but a beautiful, beautiful weekly squeeze nonetheless. And the last one here would be Netflix with a weekly, a daily and a 4-hour squeeze. But as you can imagine, no buy trigger for today. So that's what I got for you guys and gals. Be in a position of patience. Be open-minded to more of a day trade, short-term trade approach. And then it'll shape up to be a very interesting Q1 of 2025. And then the other dynamic we got, of course, is earnings around the corner. Which, out of curiosity, Netflix on the 21st of January. Apple, potentially end of Jan. Amazon, to be determined. But yeah, we also got earnings coming up around the corner. But all right, y'all, be patient. Do not be in a big rush. Be mindful of your risk. And more importantly, if you've had a good December, you've had a good Q4, you've had a good 2024, do not F it up in the final 2 or 3 days. Been there, done that. It makes it a little tough to go look in the mirror afterwards. But all right, y'all, any questions, anything you got for me, drop it in the chat. Covered. And yeah, what I'm going to do this morning is I'm going to send the files over for the labels and that blue dot, and I'll get them to Eric. He will do his magic for TradingView, and then we'll be good to go. Yeah, Roman, man, I've been there, done that, and it's no losing trade is any kind of fun. They're never enjoyable. They all suck. Only speaking from my experience, the ones that can be pretty tough to recover from mentally are the situations where you've had a good week, you've had a good 2, 3, 4, 5 weeks, and then the first couple of trades that go against you, you're giving that all back. Been there, done that way more times than I would like to admit. And it's a brutal thing to go through because you have the emotional high of, man, I am kicking ass, kicking names. Everything I touch turns to gold. I am a walking money printer. Sometimes in the matter of a day, we go from that emotional high to the opposite. Holy shit, I gave it all back. I can't believe I did it. Now I got to get short. It can all get pretty ugly. I learned this the hard way from getting my butt handed to me. The concept of the easy part of the move, I think, is so important. Like here would be me going back, 5, 6, 7 years ago. Here comes Apple, the perfect weekly squeeze. Right? Everything lines up. I get a good entry. I'm hitting it with size. And for a week, 2, 3, 4, 5 weeks, everything's just peachy. I'm making money. I'm king of the hill. All right. Everybody in the room is happy. Everybody's cashing in. And then Apple hits hits that target. All right. I pushed. I broke out. I've given you the easy part of that move. By the time we get there, for a lot of us, now we're at the high of the euphoria. Man, I nailed it. It keeps going higher every day, 3, 4, 5 weeks in a row. 4 or 5 weeks in a row. You got to lock in the bulk of that profit. So what I do now is, easy math. I'm going to buy it back here. I'm going to attack that with my max size. And then on the easy part of that push, for conversation's sake, let's say I make a $10,000 profit. It could be $100, could be whatever. On the move from that 21 EMA into that 3 ATR extension, I make $10,000. I'm going to lock that in, right? I got paid on the easy part of that push Now what can I do? Well, hey, for all I know, maybe Apple never pulls back ever again, and we're going from 255 to 280. All right, I've got 10K in my pocket. I can now turn around immediately. I can take $1,000 of that, go out to end of January, go out to the end of February. I can buy $1,000 worth of a 270, 280 call. I have now decided my fate. I know how ugly it can get from here. Lock in my 10K, roll out $1,000. The next morning, Apple gaps down 40%. I'm going to lose that $1,000. And between trade number 1 and trade number 2, I'm going to end my Apple endeavor with a net profit of $9,000. And if Apple rallies for another 4 or 5 weeks in a row, I can keep on doing that. Roll out, catch a push, lock in the profit. Roll out, catch a push, lock in profit. Eventually, I'm going to have a losing trade. Right? Apple's not going to trend higher forever. The party will end with a losing trade. My number one job is make sure when I get that losing trade, I'm not giving back too much of that profit. But that was the the vicious cycle I would constantly go through. All right, my account's at 50K, 75K, 100K, and then back to 30. And then my account's back to 40, back to 50, back to 100, back to 50. It's not the most enjoyable thing to go through. But if I could point to one thing that's really helped me, it's just that concept. My job is not buying Apple up here and making money. I've tried to make my job as a trader really, really clear. I trade squeezes from that 21 EMA into that big green line. Anything beyond that, it's not my move to catch. I can try to catch it with a little profit, but I want to make a living. I want to be one of the best in the world at that move. So yeah, I hope a few of you find that helpful. Those moments where it feels like we can't lose, that's usually when the losing trade's around the corner. It's almost like the market gods can hear us talking. Like, oh, you're feeling good, huh, Junior? I'll show you. All right, JK, I got a couple minutes here, guys. JK wants to look at GameStop. Yeah, we took a little profit here last week. Although, admittedly, I think it remains a really, really good setup. Yeah, I can't say anything bad about GameStop. Daily squeeze looks perfect. It's got a brand new 2-day squeeze that looks perfect. However, and not saying they're going to, but if the S&Ps fall apart and if the QQQ falls apart, maybe puts a little pressure on the GME. But no, I gotta like it. I'd want to buy GameStop before I go looking to buy an AMD. Every single day of the week. Yeah, I like it. I like it a lot. I think I am all caught up in here. I'm going to jump over to the YouTubes. Good morning, folks on the YouTubes. Hey, what's up, Terry? Always good to see you, man. Always appreciate Terry being in the building. Good morning, Mark. Can I advise on the 15 Jan price on the NQ? Well, if I knew for sure where the NQ would be on Jan 15th, there'd be a nice shiny new car in the driveway. Where can the NQ end up on Jan 15th? I can't answer that. What I will give you between now and Jan 15th, I would focus on the range between the 21 EMA and the 50 SMA. Next couple of days, next couple of weeks, that can make for a good box to work with. Where the way I would look at it is, below that 21 and above that 50, my major expectation is a lot of chop. Not a multi-day, multi-week trending kind of move, like you had back here, but a lot more. We're down, we're popping, we're up, we're sideways, just a lot of violent back and forth. If the bulls can work it back above that 21 EMA, get it back above, hold it back above, keep it back above, then they can work on a path back up towards the highs. At any point we break below the daily 50, then I think we could be in for potentially a much bigger flush. And then to make things even more interesting, looking like we got a brand new daily squeeze setting up on the NQ. If they can take it a couple more days into that daily squeeze, it might make things a little easier to work with. Had a big push, now we're pulling back, we're chopping, but the squeeze says, all right, pay attention. The NQ is trying to build up energy. We got to figure out for what. All right, I want to take my squeeze. I want to play for a move into my green line or my red line. All right, if I'm bullish, I'm looking up here. If I'm bearish, I'm looking down there. Now, my job today, tomorrow, moving forward, trying to gain clarity as far as, all right, what's the likely outcome? They're working back above that 21 EMA. They're getting a bunch of buy signals. They're working on a push towards the green line. Or they break below the 50. We get more sell signals, and they're looking for a flush down to minus 3 ATR. But there's the key for the swing trading game. Above that line, below that line, then the swing trade game gets easier. In between the two, I don't want to swing trade anything, really. So I can't quite tell you where I think it'll be come Jan 15th. But what I can tell you is, as far as the next meaningful move, meaningful meaning some meat on the bones, we'll watch our brand new daily squeeze. We'll watch our lower time frame signals in relation to that 21 EMA and that 50 SMA. My number one goal is I don't want to give back too much cash in between. If I spend the next 2, 3, 4 days getting torn to shreds in here, well, when we break lower or when we break higher, I might not be too quick to respond. I'll be there licking my wounds. But all right, folks, I've got to jump into my room here. Actually, for all of you in my room, give me 5 or 6 minutes. I've got to call a realtor real quick, and then I will be with you for the open. For the rest of you, thank you as always for your time. Much, much appreciated. I hope you found the morning sessions helpful throughout the year here, and got a lot of cool things in the works, a lot of cool things planned for us here into 2025. So thank you again. Finish up strong, and I will catch up with you all. Markets closed on Wednesday, so keep an eye on the YouTube channel here for a